20 years.
What are you, nuts? Who'd believe that? Let me tell you the truth. First of all, the 292,000 jobs we got in December 2015, and they told us the unemployment rate is 5%. Not true. You can't trust these people on Wall Street. You can't trust the press. What they don't count is, in December, for example, the 615,000 discouraged workers. A discouraged worker is a person unemployed, gave up looking for work, but this administration does not count them as unemployed when calculating the 5% unemployment rate. Instead, they classify the discouraged as marginally attached to the labor force, but they're not considered part of the labor force or part of the unemployment. That's why you can't trust what they tell you. If we back into 625,000, the real unemployment rate is 12%, not 5%. That's why you got to join my gang, where you get the truth and where we use charts. Join the gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande, philsgang.com. I'm here to help you. I'm tired, and you should be tired, of listening to these financial shows like CNBC where they're all geniuses and they're always wrong. Look, stop worrying about the price to book and the price to sales and all the stuff they tell you think you need to know. You don't need to know any of that. Anybody can make money in the stock market using charts. It's about money flow. Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, my name is Phil Grande, philsgang.com. The 401k big lie. They tell you invest $10,000 a year for 30 years, compounded at 6% annually. You will have a grand total of $245,000 to retire. That is not true. That is not the truth. What they don't tell you is the hidden fees. There's 27 hidden fees in your 401k. When you're all done, you lose half of what you put aside for your retirement. That's right, half. And another thing, you're not allowed to do individual stocks in a mutual fund. And you're not allowed to make money when stocks go down. That's ridiculous. Would you buy a car with just forward and no reverse? Why would you ever be in a fund that you can't make money when the stock market goes down? Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. You know, many people left the stock market after the crash, and here's why.
Responsibility begins and ends with our partners and our shareholders, and that's it.
And that's still going on. That's your planner. They don't represent you. They represent themselves, your money manager. But you have to make a change. You can't change them. You make the change. Join my gang, philsgang.com, so that we can take care of you. philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. Listen to what Fisher said, the former Fed governor.
We front-loaded at the Federal Reserve an enormous rally in order to accomplish a wealth effect.
That's right. Did you hear that? They took the stock market, front-loaded it, ran it 200%, so we ended up not only with a fake stock market, but fake GDP, fake money, fake jobs, fake prices, fake everything. But we took advantage of that, and we're going to take advantage again. That's why I told my gang in May to short the market on 5/29. That's May 29th. I'm telling you to short the stock market. And we were right. And the market went down over 11%. That's why you got to join my gang and learn how to short stocks just as much as buying them. Learn how to short with me, Phil Grande at philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. You know, everybody, the hot stocks Apple or Google, whatever it is, it doesn't matter. What people don't understand is every stock is the same. If the institutions buy it, it goes up. If they don't, it goes down. It doesn't matter the name. That's why we use charts to identify money in, money out. Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. You know, it's been 7 years now since Obama ordered his Fed chairman to lower the savings rate from 5% to less than 0.25%. With the false narrative, it would spur economic growth and jobs. Everyone would have an opportunity in this economy. That's what he said. But what it spurred was a front-loading of the biggest, fake, unsustainable stock market rally of 200%. That's what it spurred. Now, most people did not participate in that rally because people got out of their 401k in 2009. And they said, just get me out. I want nothing but fixed income. And they got killed because with low interest rates, fixed incomes get murdered. You got to know what you're doing. If you're going to really retire, you got to be associated with the stock market. That's why you come to philsgang.com. That's philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Be sure to watch the Phil's Gang Show with Phil Grande, weekdays at 3 p.m. Eastern Standard Time on various devices like smartphones, tablets, your computer, and more. Get free access to the Phil's Gang Show right in your hands at home or on the go. Simply go to philsgang.com. That's philsgang.com and click on the Listen Live link. And we'll see you on the charts.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
Markets could add to Tuesday's losses on a fresh drop in oil prices and uncertainty over global growth. The major averages closing near the lows of the session on the second lightest volume day of the year. The Dow and S&P 500 are both back in the red for the month, and the Dow also slipping back into correction territory. Energy leading the declines, falling more than 3% on oil's weakness. And oil slide continues today after Saudi Arabia rules out production cuts. Markets in Asia closing mostly lower, but the Shanghai Composite bucking the downward trend. Shares in Europe are lower on the renewed slide in oil prices.
Oil. The market was down about 270 points. Now it's only down 12 points because, oil went up. We had an increase of about 5% during the day. Oil went back up. So Goldman Sachs controls the price of oil. They have one of the largest commodity trading rooms in the country. So just like JP Morgan controlled silver, so doesn't Goldman Sachs control oil. So they decide to raise oil. They go from a negative in the market to, again, 275 points. Now we're only down 12 points. Look, first of all, we're led to believe that it's oil that's controlling the stock market. I mean, you can see it today. It's ridiculous. Thank God we use charts. Thank God I'm a chartist, because I don't change my position until my chart changes. That's the beautiful thing. Give you an example. One of the same 5 stocks that we invest all year long, Intel, Goldman Sachs. We have not changed our short position in Goldman Sachs. We went short in November of last year. We're still short. We have not changed that position because of oil going up, oil going down, market back up, market back down. The beautiful thing about charting is you're following the money. So the charting is a smoothing mechanism. If you're not using charts and you're just listening to fundamentals, there is no way. No way.
The move in the market that we're seeing right now, we're about to come on the air, the stock market's getting hammered, cut the losses in half as oil moves higher. What to make of today's trade in the bigger picture of whether you think that rally that may have started on the day that Jamie Dimon bought his own stock can continue or not?
Well, I would just say that I'm just looking at the price of oil each and every day, and that's telling us the direction we're going, Scott. I mean, if 53 is where Jamie bought it, we break that. I think Katie bar the door, you got to watch out in terms of the downside and the financials. But financials have not been able to react well in good or bad tapes. That's been a problem.
We test the low or no?
I think we could, sure.
We test the low or no?
We could, but I'll only give it a 20%.
I know we could. Are we?
I know we could, but he's going to test the lows, and he won't say if they're going to test the lows or not. I'll tell you if we're going to test the lows or not. When I look at my chart, it tells me. You see, It just is amazing. Why don't they just admit that charting works? But you know why they won't admit it? The charting works, and it took Kramer how long? Because finally he had to admit charting worked. He used to call charting voodoo magic. Remember, voodoo magic, he would say. But we all knew he was using charts because we could tell his calls. They weren't based on fundamentals. He said they were, but how he called. If you're a chartist, you can tell when somebody tells you to buy or sell a stock, you know on their call whether they're using a chart or fundamentals. So he's sitting there lying to everybody saying he's using fundamentals when using a chart. Finally, he starts admitting he's using charts. Now he starts promoting charts, and he's still promoting charts. Because the charting system is the only way that makes sense. Because it's mathematics. It's mathematics. It's not emotion. So we are now led to believe every day you just follow oil. If oil goes down, then that means the market's going to go. If the oil goes down, the market's going to go down. If oil goes up, the market's going to go up. How silly is that? That's it. That's how the market works. No more about earnings. I thought it was about earnings. I thought it was about mergers and acquisitions. Where'd all that go? I thought it was about identifying undervalued companies and going and buy them and hold them. Change the management. I thought it was about following free cash flow, PE ratios, trailing forward PE ratios. I thought it was about management. We would judge management. They always tell us, judge management, how well they're doing, by looking at the return on assets, the return on equity. Let's see what they get on those, what kind of returns they're getting on equity, what kind of returns they're getting on assets. We'll manage that's how we're going to identify if we have good management and whether we're going to buy that stock or not. PE ratios. But now, it's easy. Hey, you get up in the morning, oil's going down, you short the market. Oil goes up, you go long the market. What are you, nuts? The market's now up 26 points. But one thing that has not changed, when I'm using a chart, I'm not all over the place. Goldman Sachs is down 21%. 21%. We haven't made any changes since we shorted on November 13th because of oil going down, oil going up. What are you, nuts? Same with IBM. Now, IBM, if you take a look at IBM, we were short IBM since going back on IBM. I'll give it to you right now. IBM, we were short back in January 5th. January 5th, IBM, we shorted it. And then finally, our chart starts showing us that money started to come in. Money started to come into IBM. But here's what was interesting. It started to come in on February 12th. February 12th, 2016. But what we found, the stock was going up only because investors were getting their profits up from the short. So the stock is going up for the wrong reason. It's called short covering. In other words, there wasn't any accumulation of IBM. In other words, institutions weren't coming in to accumulate more of IBM as an investor. And we can see that on a chart. You can see the pattern. So you always know, is the stock going up because the institutions, is T. Rowe Price or Bank of New York Mellon, are they coming in accumulating more of the stock for their own position? Or is it the guys who sold it short at 140, now it's gone down to $116. Are they now buying it to cover their position? See, that's the beautiful thing. That's the beautiful thing about charting. So, but again, the problem is the financial media. They are a PR department for this administration and for Wall Street. For this administration's cronies at Wall Street. It's amazing. I've warned that this oil connection to the stock market every day up and down is a ruse. It's a mask to cover up the real problem, our insolvent banking system. An economy which depends on China. There's our problem. That's our problem right there. Do you think when our market went down in August 1,900 points, it was oil? Did we wake up in the morning when the market was down 300 points and then in 3 days went down 1,900 points? Was it oil? Of course not. It had nothing to do with oil. So the problem is the media, the financial media, is not telling us the truth. It's a big ruse. It's a big masking the real problem, our banking system. The U.S. government and the Federal Reserve balance sheet have become so insolvent in their effort to borrow and print the economy back to health. There's the problem. There's the problem. The debt is incredible. There's the problem. Not oil, but they're not going to tell us that. We'll be right back after this break. 15 past the hour here in Phil's Gang. Subscribe to my gang and use charts.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi, I'm Phil. The jibber jabber from CNBC or the Fed. Follow me, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande, philsgang.com. Everybody was asking me, how did I know to short Ford when it was November and it was when Aunt B was telling us everything was fine? Well, what people didn't know is Aunt B was lying to us. Because when she was raising the rates, machinery sales were down 5.6%, computers were down 8.7%, communication equipment sales down 21%. I took a look at our chart and I saw that institutions were pulling money out of Ford. So we said, let's short Ford. And we did that in November, on November 10th, because my charts told me there was a big sell signal, and we took advantage of it. And you know that stock Ford has now dropped 17%. That's the return my gang has now, 17%. Don't follow any of the jibber jabber from CNBC or the Fed. Follow me, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
AMVA, and I've lost over 30K on it, but it had excellent earnings the last several quarters, and if they make the cameras and drone equipment, I don't know why it's so weak these days.
It's so weak these days because you don't pay attention to what they make. You don't care about their earnings. The problem is the institutions are pulling their money out, and that's all you need to know, and that's what we identify in the chart, and that's why I become a Phil's Gang member.
Go to philsgang.com or give us a call at 877-600-4264.
They just told us right away that we're going to house you, we're going to feed you, and every single one of his medical bills is just all taken care of.
Saber que el tratamiento es completamente gratis nos quita una preocupación de encima.
We have phenomenal research, outstanding clinical care, and the generosity of public, which allow us to treat patients regardless of what it takes. And that's what makes St. Jude so magical.
At St. Jude Children's Research Hospital, families never receive a bill for treatment, travel, housing, or food, because the only thing a family should worry about is helping their child live.
Doctors send us the toughest cases to be treated at St. Jude, and our patients come from all over the world.
When we come here, they told me, don't worry, everything will be taken care of.
We could never repay St. Jude for what they've given us.
Because of you.
Gracias a ti.
Because of you.
There is St. Jude.
There is only one talk show host, Phil Grande, who delivers both social and financial talk. Not even Hannity or Rush can deliver a 1-2 punch like that. That's Phil Grande, philsgang.com. Phil Grande is unique, the industry leader, the first talk show host ever to combine social issues and finance into winning stock market ideas. That's Phil Grande, philsgang.com. That's philsgang.com.
Hi, I'm Phil Grande at philsgang.com. We're hitting a new year, and you should, at the same time, come in with a new attitude, a new philosophy that you're going to make money when the stock market goes down. That's right. This is the third bubble, and you don't think it's going to crash? The first bubble did. The dot-com, the second bubble, the housing and financial con. Why do you think the third bubble, which is twice as big as the two previous bubbles, is any different? It's not different. Matter of fact, it's worse. It's going to go down faster. The stock market is going to go down 50%. You're going to lose 50% of the money you have in the stock market. You're going to lose 45% of the equity you have in your home. You're going to lose 30% of the money you have in your savings.
Welcome back to the Phil's Gang Show. This segment is brought to you by philsgang.com.
And welcome back to Phil's Gang. Stock market is now up 58 points positive after being down about 275 points negative. And they're saying, oh, well, that's because we went down about 275 points because oil dropped to about $30.68. And now it's up, I think it's around $32.68. So 32.23. So 30.68 to 32.23. So now it's going up from 30.68 to 32.23. Now the market's up 50 points instead of being down 250 points. Isn't that crazy? Isn't that crazy? So what do? You don't pay attention to that. Look, here's what they don't want you to know, is that the government, the Federal Reserve, the government's balance sheet and the Federal Reserve balance sheet, that's the problem, not oil. These balance sheets have become nearly insolvent in their effort to keep borrowing and printing money to try to get the economy back to health. All this QE, so companies could borrow money, and keep buying back their own stock. Giving money to hedge funds so they go and speculate to get the stock market up. Instead of trying to get the economy going and the stock market going through what? Through savings and investment. But they didn't want to do savings or investment. They thought they'd take the quick way. Just print money. That's how we're going to grow this. That's how we're going to grow the stock market 200%. Well, there's a problem with that. Their debt has grown. So the federal government debt has now soared to nearly 600% of the total revenue it brings in. What are you, nuts? And the Fed has leveraged up its balance sheet 77-1. That's so they could keep interest rates at 0%. Are you nuts? This is the problem. But see, they don't want you to know that. So that's why they point you towards oil. See, now this is a real problem, what the Fed has done. Especially because we're in a recession. We never got out of the recession. We're in one. And it's going to get worse. So here's the problem. The Fed is now, they have no ammunition left. As the recession gets worse and the stock market crashes, the Fed will not be able to lower interest rates. They can't lower interest rates to give us relief. Remember, every time when they have a recession, first thing they do, usually the interest rates are about 5%, they drop them. Well, they can't do that anymore. Matter of fact, that 25% rate hike they made in December, they're going to soon take that away. See, the Federal Reserve has taken on a huge amount of debt since the financial crash. Household debt, think about this, has increased back to its original 2008 record of $14 trillion. Household debt. Business debt has grown from $10 trillion to almost $13 trillion. How'd that happen? Because they're buying their own stock back. And the national debt has grown from 9.2 trillion to 19 trillion. And the Fed's balance sheet was at 880 billion debt. Now it's at 4.5 trillion. Are you nuts? So what's going to happen when the banks need another bailout? There's no room on their balance sheet. So they can't go to the bank and say, let me buy all your mortgages, let me buy all your car loans, let me buy all these loans, those loans. They can't buy them because their balance sheets are bloated. The last time they bought all the banks' subprime housing loans and all the other crap off their balance sheet so they could give them new money, the balance sheet reflected 880 billion in debt, the Fed. Today is 4.5 trillion. They have no more room. This is bad. China, not oil. China accounts for a lot of our problems. 35% of the global growth, including our growth, comes from China. Without China, there is no growth. But China is starting to crap out. In fact, it's more than that. Not 35% of global growth. How about including the emerging markets? We're up to 50% now. So let's think about that. China, including the emerging markets, account for 50% of economic growth around the globe. Isn't this crazy? Why do you think in August, when we woke up and the market was down 300 points, and then it went down 1,900 points in 3 days, did anybody say it was oil? No. It was China's stock market. It was manipulating their currency. It wasn't oil. Oil has nothing to do with what's going on. That's why it's so important. Subscribe to my gang. And you're always going to be on the right side of the transaction. You're not going to sit here one day, like today, where the market's down 250 points, now it's up 50 points, driving yourself crazy. This morning, give you an example, copper. Copper has been one of our best stocks. One of our best stocks, copper, FCX. We had in copper, a buy signal around $5. It went from $5 up to $8. That's a 60% gain. So let's say my gang members got in even later. Let's say they got a 20% gain. What's wrong with that? So all of a sudden, it started to pull back. Started to pull back in the last couple of days. Oh, everybody's getting, so what do we do? What do we do? It's pulling back. And I pointed out to him, relax. Relax. Look at your chart. What's your chart telling you? It's telling you the institutions are still coming in and accumulating. They're just taking some profits. And now this afternoon, they're happy. They're happy that I told them that. I told them, don't get excited. Don't keep listening to CNBC. Everything's going to be fine. And that's what charting does for you. It's a smoothing mechanism. Subscribe to my site right now. philsgang.com. Call 877-600-GANG and be a subscriber.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi, my name is Phil. PhilGrandePhil'sGang.com. Do you ever notice they always tell you to buy, but they never tell you to sell? They never tell you to sell. Well, I'm going to help you. I'm going to help you understand. When you buy a stock, and if all you do is buy, and you never sell short to make money where they're going down, you have to be so good. That means you got to buy the companies that are always going up. Nobody's that good. Nobody could possibly be that good. You got to make money just like you make money when you buy a stock. You got to make money when a stock goes down. That's how you even the playing field. That's how professionals make money. They make money going up and make money going down, but they don't tell you that. They just want you to try to make money going up. They don't want you to make money going down because they make that money on you. Join my gang, Phil's Gang. Learn how to short stocks at philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. Do you ever notice they always tell you to buy, but they never tell you to sell? They never tell you to sell. Well, I'm going to help you. I'm going to help you understand. When you buy a stock, and if all you do is buy, and you never sell short to make money where they're going down, you have to be so good. That means you got to buy the companies that are always going up. Nobody's that good. Nobody could possibly be that good. You got to make money just like you make money when you buy a stock. You got to make money when a stock goes down. That's how you even the playing field. That's how professionals make money. They make money going up and make money going down, but they don't tell you that. They just want you to try to make money going up. They don't want you to make money going down because they make that money on you. Join my gang, Phil's Gang. Learn how to short stocks at philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264. What is Phil's Gang? Phil'sGang.com is a subscription website service that host Phil Grande has been teaching and providing daily stock investment recommendations for over 15 years, all in the name of making its customers educated investors and helping the kids at St. Jude's Children's Hospital. If you want to take charge of your financial future, then do not wait any longer. For only $49.95, become a Phil's Gang member today. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264.
Hi, my name is Phil Grande at philsgang.com. You know we're going to have not only a stock market crash in 2016, but a housing crash in 2016. Don't you like how they tell us the housing's in recovery and the market's in recovery and the economy's in recovery when it's not? It's in a bubble. Take housing. They loaned to a Wall Street firm called Blackstone. $7 billion. They buy 41,000 houses to go rent. Are you nuts? When they can't collect the rents anymore, those houses are going on the market and going to depress the real estate business by 30 or 40%. It's the same thing with stocks. They loan people money 600% more than they ever did before to buy stocks. That's all debt. And when the market goes down, they're going to have to dump those stocks to pay back that debt. And boy, will the market drop. Join my gang. Learn how to short. philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
At St. Jude Children's Research Hospital, families never receive a bill for treatment, travel, housing, or food because the only thing a family should worry about is helping their child live.
Doctors send us the toughest cases to be treated at St. Jude, and our patients come from all over the world.
When we come here, they told me, don't worry, everything.
Anybody who puts money in my pocket is my friend. And Phil Grande can do the same for you. Learn how to grow and invest your money. Here's Phil Grande. Stock Corner is brought to you by the Phil's Gang video channel. Go to philsgang.com. Click on the video channel graphic and check out Phil's free videos on the market, economy, and current events.
And welcome to Phil's Gang. Welcome back. Okay, remember to subscribe. Become a subscriber. It's only $49.95 a month. You can give a call, 877-600-GANG. That's 877-600-GANG, where Denise is there and Steven there, and they'll pick up your call, visit with you, get you organized. And I think one of the programs that you should start with is our Working Investor Program. Okay? And when you join, I think that's the easiest one to start with. And what we're going to do now is we're going to focus on our refineries. That's right. The refineries got hit about 50, 60%. They dropped 50, 60%. Nobody wanted them. Just like when we bought the gold mining stocks, nobody wanted them. And our AU, one of our gold mining stocks, up 40% alone because nobody wanted it. Nobody's going to want these refiners either. Everybody waits till they move, then they buy them. Well, we identified through our charting when the institutions, when Vanguard or T. Rowe Price or JP Morgan is going to start accumulating, take, for example, MPC. I think that's one of the better ones. That's Marathon Petroleum Refiner. So what we'll do is if you join right now, we're going to start immediately following 4 refiners. At 1:15 every afternoon, you'll be personally coached on these refiners. As soon as we spot the one that the institutions are accumulating, where BlackRock or T. Rowe Price or JP Morgan or Dodge & Co start accumulating it, then we will accumulate it. That's called the buy signal. So I think this is a great opportunity because these have been driven down 40, 50, 60%. I think this is where a lot of the profits are going to be. I said to my subscribers, and you can ask any one of them, I said in the last month of December, I said 2016, most of our money is going to be made in gold, metals. And guess what? It's proven to be true so far. And I said also oil. But I said the refiners, we want the refiners. Okay, because nobody wants them. And that means that there's so many people who bet that they went down, that they dropped 50, 60%, they have to buy their positions back. That pushes the stock up. And when those stocks start going back up, when they start covering their positions, then all the new money will start pouring in. That's called in a stock pattern, phase 2 and phase 3. There's 4 out of a stock pattern. There's 4 steps in a pattern. Between phase 2 and phase 3 is where all the easy money is made. That's the easy money. Because you have the shorts who are covering, buying their shares back. And then you have the new money that's coming in where you get the BlackRocks and the T. Rowe Price and JP Morgan, Goldman Sachs. They start accumulating these. So you got double the amount of money between phase 2 and phase 3. We call the easy money. So why don't you try that? And then if you think that works for you, then participate in all the other programs. It's the same $49.95 a month, for heaven's sakes. All we ask is if you're successful, donate a little bit of money to St. Jude's, because that's what this program's about. We're here every day to raise money for St. Jude. All we ask you send a check directly to St. Jude when we're successful. Okay? So again, the refiners. MPC is the one that we think will be the best one, but it doesn't matter. The chart will tell us. And we also have MPC, Marathon. We have MRO. That's another good one too. That's MRO is Marathon, and MPC is Marathon Petroleum. Okay, and then MRO is another Marathon Oil. Then you got TSO, and one of our favorites is, of course, Valero. That's very popular. And right now we already got a move. We're almost filled on Valero. We have our target. It hasn't got hit yet, May today. So check it out. So right now, give us a call, 877-600-GANG, and subscribe. You know, this was interesting. After looking at Trump's win last night and listening to the press, both last night and this morning, I said to Marta, my wife, I said, this is nuts. I said, when is the press going to be truthful? They're not truthful about anything. They're certainly not truthful to us about the banks. The whole of our economy has been rigged to benefit the banksters after 2009. The laws gave them so many tax loopholes and subsidies, and even when they're caught cheating us, we have to end up paying their fines. We pay their fines for them, and they don't go to jail. It's amazing. The only reason why Bernie Madoff went to jail, because he stole from the rich. And if he went out and got a banking charter, he wouldn't have gone to jail. He'd still be in business today. But when are they also going to be honest, the media, about what's going on in this election? It's amazing to me. If Rubio had the same lead as Trump does right now, I will bet you that everyone in the media would be calling the primaries over, that they would say Rubio has won. He is the nominee. But instead, here's what we hear. Listen to these idiots. First, here's Trump last night.
Of course, if you listen to the pundits, we weren't expected to win too much, and now we're winning the country. And soon the country is going to start winning.
Now, here's Al Hunt. This guy is just so elitist. I'll get thrown off the air if I say what he really is. But listen to this.
But I think when people say it's over, I'll show you how old I am. Give me a scenario. The scenario is that Cruz does pretty well next week, that Kasich wins one or two of those states up in New England, and then somehow Rubio comes back and beats him in Florida, and Kasich beats him in Ohio. Yeah. What are the probabilities of all that happening? Maybe 5%.
And he gave that a 5% chance. But he wouldn't admit that it's over. But if Rubio was ahead of Trump, it'd be over. Now, listen to this. Cokie Roberts, another one. Listen to this.
Donald Trump clearly is scheduled at this point to win the Republican nomination. And, it's not funny anymore. The outrageous comments are not funny. They're bullying comments. And they are playground behavior. And suddenly there's the possibility that that kind of behavior could be elected president of the United States. And that's not funny.
Oh, that's not funny. So it's okay to have a liar like Obama who tells us we can keep our doctor, we can keep our health care. I didn't think that was very funny, but because Obama said he wants to punch, because Trump said I want to punch this reporter in the face, he doesn't qualify. But Obama qualifies, right? It's okay for Obama to lie to all of us. Our premiums have gone up 40, 50%. He told us that we're going to go down $2,500 our premium for a family. Instead, it's going up $2,500 a premium, but that's okay. So Cokie and Al Hunt are okay with that. It's amazing, isn't it? Then here's another one.
What American people are saying on the far right, far left, in the middle.
Something needs to happen. Anything.
Right, and they're looking for some kind of disruption. They want change in the worst possible way. And in my opinion, and in Cokie's opinion, Donald Trump is doing it in the worst possible way.
Right. Worst way, Donald Trump. He's worse. He's worse. That's Fournier. It's unbelievable. I guess they're looking for the candidate, their candidate, play the role of the president. I think they're like what they call them in the movies. They go out and they try to get talent to fill the talent scout. I guess they're talent scouts. I guess they got this perception of what a president should be, and then they fill it. They fill the role with somebody like Obama or Bush, another idiot. At least you think they would give him credit and say, here is a guy, Trump, who is not owned. He's self-funded. He's not going to be owned by the banks or the Federal Reserve. But no, they don't. We'll be right back after this break. More on stocks. Remember, subscribe. We're going to be taking a look at the refiners.
For more information on this show, go to philsgang.com or give them a call at 877-600-GANG.
Reinhardt.
Welcome back to Phil's Gang Radio Show. For more information, simply go to philsgang.com. Now, here's Phil.
You're throwing shade on the rally we saw. Doc says, no, I mean, you can believe in it. So
yeah, well, I think you can believe in it still. And I'm not saying that we couldn't retest. I'm just saying I think it's a smaller chance that we retest 1810.
No, you can believe in the tooth fairy, too. You can believe in the tooth fairy. Just like this guy here. Listen to this.
Let's start with Valiant. Where do you see the value, and why do you think now's the time to jump in?
This is a company that's at a single-digit PE, real free cash flow, real products, and people are focusing on a very small percentage of the business.
Single-digit PE. This is a company with single-digit PE, he says. Real products. What, all the other companies don't have real products? Real cash flow, but the other companies don't have real cash flow. GE doesn't have real cash flow. IBM doesn't have real. Just this little company is real cash flow. You see? Now, here's all I want to know. I don't care about the name of the company. I don't care if they believe this rally is for real or not. All I look at is if money comes in, if the institutions, the Dodge and Cox and JP Morgan and Franklin Resources, if they come in and start buying, to me, that is what I look at, because they do the research. They spend millions of dollars on research. They have MBAs. They have the brightest minds from MIT and Harvard. That's what they do. So with today's technology, first of all, remember, no stock is connected. When a stock goes up $10 or down $10, it's not because of what its company does. The stock of the company is not connected to the company any longer. The price of the stock of GE is not connected to their trailing PE ratio or forward PE ratio. It's not connected to their profit margin, not connected to the return on assets. It's not connected to the revenue per share, not connected to their free cash flow. It's not connected to anything. It's when the Federal Reserve decides to print money and give that money to the hedge funds to go and buy and speculate stocks. That's what is happening. The day of fundamentals, the day of calling a broker, a money manager, some advisor, and ask them, what do you think we should do? Those days went out in the 70s when they deregulated the market. You're just catching on. Finally, you're catching on that the 401k is a sham. Every day you pick up the newspaper, they're suing somebody else. Some company, the people that own a 401k in some company is suing. That's all you see every day. 401k participants suing. You're finally catching on that the 401k was not a product for you to retire. It was a tax code. And when they took the tax code and they stuck in that tax code a mutual fund and they called it a retirement plan to screw you. And now the guys on Wall Street, with all their hidden fees, take 65% of your money and put it in their pocket. But I still can't convince you of that. But this guy talks about VRX, so let's take a look at it on a chart. I don't even know what the company does. I have no idea. Valiant, pharmaceuticals, okay. I care less. Here's what I'm looking at. I go to my chart. The first thing I want to know is, who are the institutions that own most of the stock? Is it JP Morgan? Is it Northern Trust? Who owns it? And then when I put it on the chart, and I know that, I then can tell from the chart if the money is going into this thing. No, it's not. Money's coming out. So he's telling you to buy it. Why? Based on what?
Let's start with Valiant. Where do you see the value, and why do you think now's the time to jump in?
This is a company that's at a single-digit PE, real free cash flow, real products, and people are focusing on a very small percentage of the business as if that's the entire thing.
So people are small. They're focusing on a very small part of the business. Are you focusing on a very small part of the business? I'm not focusing on a very small part of the business. Single PE? Who cares about PE ratios? If it was that easy, then all you do is sit there every night, go through a list of companies, and the company that has the lowest PE, you invest in it. It was that easy. Here's what you look at. First of all, you take a look on the chart, and what we look at is see if there's an accumulation of that stock. The answer is no. No. There is no accumulation of the stock. In fact, they're pulling their money out. I look at another part on my chart. There's what we call a buy signal that tells us there's an accumulation that's going on. I look at that. No, there's no accumulation. All that's happened is the stock has gone from $102 to going from 100. Let me get this right. I don't want to get you a bad number. Going from $79 up to $85, $79 to $85. But you know why? It's gone up for the wrong reason. Because the guys who sold it short at $119 said, I think this stock's going to go down to 72. They're taking their profits. By taking their profits, it's moving the stock up temporarily. That's called a V-shaped formation. Until it enters a pattern that what we call a W formation, you don't buy it. So you'd lose money buying that right now. So again, you got to, please, follow the charting. You're going to be fine. So please subscribe. And all I ask, if you do well, when you subscribe to Phil's Gang, is you donate some money to St. Jude. Now, we are going to start working our four refiners. They discounted 50, 60% discount. Every day you'll have your personal coach at 1:15 Eastern Time telling you either to buy it or not buy it. Then once we buy it, whether you add to it or not add to it. And if you can't make it at 1:15, it's archived, so you go home at night after work, you know exactly what to do. You're coached all the way through it. You're coached all the way through. We put it on what we call our PT2 charts. So simple. It's called the Working Investor Program. You just call, you subscribe to Phil's Gang, do it right now, 877-600-GANG, and just join the gang. And just remember to participate in the Working Investor Program at 1:15. I want to get back before I run out of time here. I don't have much time about these people, these reporters. These people like Cokie Roberts and Al Hunt, you know, they know that the unemployment rate is not 4.9%. They know that. But you know why they report it at 4.9%? And they lie to us because it's really 26% if you add back in the 95 million people that aren't working. But they don't. They validate the 4.9% to validate Obama's failed policies. That's why they do it. His failed policies are easy money, of corporate bailouts, increased government spending, excessive debt bubble, excessive spending, excessive borrowing, excessive taxing. And indirectly, they're validating Bush failed policies that caused the financial meltdown in 2008. But you know what they're really doing by lying and validating the 4.9%, not telling the truth? They're validating their own involvement with two losers. That's what they're doing. It's crazy. See, the financial press, just like Bush and Obama, they knew there could be no, and they know, what do you mean knew? They know could be no real economic recovery because there is no real economic growth. And what did the Fed do? The Fed goes in and pumps and prints until they're so up to their ear in debt that once this crash happens, they're not going to be able to bail anybody out. But see, Cokie Roberts and Al Hunt, they don't like Donald Trump. No, he doesn't pass the smell test. See, because he can't be bought. See, Trump can go in and tell Congress enough is enough. We're not going to keep spending. We're going to stop this excessive borrowing. We're going to fix what's broken because I was self-funded. I don't own the pharmaceutical companies. I don't own the lobbyists, anything. So the financial press, they know that there's no real economic recovery. They know that all that's happened in 2008, they just put a temporary stop and a slide back into a depression or recession. And we're still sliding backwards. They just temporary stopped the slide off the cliff. Like, you know, when they put a block underneath the wheel of a car or a truck, that's what they did with 0% financing, with the accounting games, with the fake stress tests. That's all they did. So I want to put you in a position that you're hoping that the block moves and you're hoping that the car goes off the cliff, because we're going to then be in a position to make money when it goes off the cliff. And all I ask for you to do is donate to St. Jude. Call now, subscribe to Phil's Gang, and follow us with our refiners.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to